October 24th, 1929, Black Thursday. Dow Jones drops 11% in single day. Panic selling begins. By October 29th, Black Tuesday, market crashes additional 12%. Over next 3 years, stock market loses 89% of value. 10 million Americans unemployed. Banks fail. Great Depression begins. But bonds were safe. Gold was safe. Real estate held some value. Wealthy who diversified survived. September 15th, 2008. Lehman Brothers files bankruptcy. Largest bankruptcy in American history. $600 billion vanishes overnight. Credit markets freeze. Stock market crashes 57% over 18 months. Housing prices drop 30%. 10 million Americans lose homes. But Treasury bonds rallied. Gold rallied. Those who had cash bought assets at bottom and made fortunes. Now imagine both crises happening simultaneously. Stocks crash like 1929. Real estate crashes like 2008. But this time, bonds crash too. Gold might crash temporarily. Crypto crashes. Everything falls together. No safe haven, no place to hide, nowhere to rotate wealth. This is 2026 to 2027. This is everything bubble collapse. And this is not prediction. This is mathematical inevitability. Over past 9 videos, we decoded the architecture of coming crisis. $317 trillion debt that can never be repaid. Buy, borrow. Die strategy that transfers wealth upward. 7-stage collapse pattern. America is currently at stage 5. BlackRock's $10 trillion empire controlling your investments. Cantillon effect, ensuring you always get money last. CBDC digital control replacing financial freedom. 1933, gold confiscation playbook ready to repeat. Billionaires buying farmland water rights and bunkers while telling you to buy stocks. BRICS dismantling 80-year dollar hegemony. Every piece documented, every pattern clear. Now in this final video, I synthesize everything. Show you exact timeline for 2026 to 2027. Explain why this collapse is different from every previous crisis. Reveal what triggers it. Detail the domino sequence. And most importantly, give you final actionable strategies before window closes. This is not fear-mongering. This is pattern completion. This is mathematical endpoint. This is endgame. Let me start with why 2026 to 2027 is different from 1929 and 2008. 3 fundamental differences make coming collapse unprecedented. First difference, everything is bubbled simultaneously. In 1929, only stocks were in bubble. Price to earnings ratios hit 32. Unsustainable. But bonds were fairly valued. Real estate was stable. Gold was money. When stocks crashed, wealth rotated to safety. In 2008, real estate was bubbled. Subprime mortgages created housing bubble, but stocks recovered quickly. Bonds rallied, gold rallied. Again, rotation to safety was possible. Today in 2024, heading into 2026, every asset class is bubbled. Stocks, S&P 500 PE ratio 25 versus historical 16. Buffett indicator at 200% versus historical 100%. Bonds, $36 trillion US debt with $1 trillion annual interest payments. Unsustainable. Any rate increase crashes bonds. Real estate, average home price to income ratio 6-to-1 versus historical 3-to-1. Crypto, Bitcoin at $100,000 with limited real utility, pure speculation. Derivatives, $600 trillion market, 6 times global GDP. Everything is overvalued. Everything is at risk. When crisis hits, there is no safe rotation. Second difference, debt levels are exponentially higher. In 1929, U.S. federal debt was $16 billion. That was 16% of GDP, manageable. In 2008, debt was $10 trillion. That was 64% of GDP, concerning but survivable. Today, 2024, debt is $36 trillion. That is 130% of GDP, and growing 1 trillion every 100 days. This is not survivable without money printing or default. Either choice destroys currency value. Add corporate debt, 14 trillion. Household debt, 18 trillion. State and local debt, 3 trillion. Total U.S. debt, 71 trillion. That is 270% of GDP. Then add unfunded liabilities. Social Security, Medicare promises. Estimates range from $100 to $200 trillion. These are promises that cannot be kept. Mathematics does not work. System is insolvent. Only question is timing of recognition. Third difference, central banks are trapped. In 1929, Fed had room to cut rates. In 2008, Fed cut rates from 5.25% to 0 and launched quantitative easing. These tools stabilized crisis. But today, Fed is trapped. Rates are currently 5.5%. If Fed cuts to stimulate economy, inflation reignites. If Fed keeps rates high, government cannot afford debt service. If Fed prints more money, dollar loses reserve status and hyperinflation begins. No good options remain. This is checkmate. Jerome Powell admitted this trap in 2023 testimony. He stated, "We face difficult trade-offs between inflation and employment." Translation, we cannot solve both problems. We must choose inflation or unemployment. Either choice is crisis. Either choice is politically unacceptable. Either choice leads to collapse. So what triggers the collapse? Multiple candidates exist, and likely several will occur simultaneously, creating perfect storm. Trigger 1, debt ceiling crisis. Every year Congress must raise debt ceiling or U.S. defaults. Political polarization makes agreement harder each cycle. 2023 saw brinkmanship until final hours. 2025 will be worse. If Congress fails to raise ceiling, U.S. Treasury cannot pay bills. Default occurs. Bond market crashes. Global panic. Trigger 2, regional bank cascade. March 2023 showed vulnerability. Silicon Valley Bank, Signature Bank, First Republic all failed within weeks. Fed bailed out depositors, but system remains fragile. Over 4,000 regional banks in America. Many hold underwater bonds and commercial real estate loans. If more banks fail, confidence evaporates. Bank runs begin. Fed cannot bail out everyone. Banking system freezes. Trigger 3, commercial real estate collapse. Office buildings are empty. Work from home is permanent for many. Office vacancy rates in major cities hit 30 to 40%. Building values dropping. Mortgages underwater. Banks holding these mortgages face losses. Estimates suggest $400 billion to $1 trillion in commercial real estate losses coming. This hits regional banks hardest. Triggers bank failures, starts domino effect. Trigger 4, Japan crisis. Japan debt is 260% of GDP, highest in developed world. Bank of Japan keeps rates near zero to prevent government default. But inflation is rising. BOJ may be forced to raise rates. If rates rise, Japanese government bond prices crash. This triggers global bond sell-off because all bonds are interconnected. Japanese crisis becomes global crisis. Trigger 5, China real estate implosion. China real estate sector is $55 trillion, 300% of China GDP. Evergrande collapsed. Country Garden collapsed. Crisis spreading. If China real estate crashes completely, Chinese banks fail. Chinese economy crashes. Global supply chains disrupted. Commodity prices crash. Deflationary shock hits world. This triggers everything bubble pop. Trigger 6, geopolitical shock. China invades Taiwan. Semiconductor supply cut. Global economy stops. Or major war in Middle East. Oil shock. Inflation spike. Or nuclear escalation somewhere. Fear overcomes markets. Everything crashes. Geopolitical triggers are unpredictable, but increasingly likely. Any one trigger is manageable. But these triggers are correlated. Debt ceiling crisis causes bank failures. Bank failures cause commercial real estate crash. Real estate crash causes recession. Recession forces Fed to print money. Money printing causes inflation. Inflation causes bond crash. Bond crash causes international crisis. International crisis triggers geopolitical shock. Dominoes fall rapidly, and once started, stopping cascade is impossible. Here is likely sequence of collapse once triggered. Stage 1, trigger event occurs, could be any of above. Markets drop 10 to 15% initially. Volatility spikes, fear rises. But mainstream media says this is temporary correction. Buy the dip, they say. Many investors believe and buy. This is trap. Stage 2, second wave hits. Whatever triggered crisis spreads. If banks failed, more banks fail. If bonds sold off, more bonds sold. Initial shock becomes sustained decline. Markets drop another 15 to 20%, now down 25 to 35% total. Panic begins. Investors try to sell, but liquidity dries up. Everyone wants out. Nobody wants in. Prices gap down. Stage 3, credit markets freeze. Corporate bonds stop trading. Commercial paper market seizes. Companies cannot roll over short-term debt. This happened in 2008 with Lehman. Will happen again, but worse. Companies start defaulting. Layoffs begin. Unemployment rises. Consumer spending crashes. Recession officially starts. But recession is not the problem. Recession is the symptom. Stage 4, government response fails. Fed tries to intervene, cuts rates, launches QE4 or whatever they call it. But this time, money printing does not work. Why? Because confidence is broken. Investors see through the game. They know printed money is worthless. They sell regardless. Fed balance sheet explodes. Currency weakens. Inflation rises despite recession. Stagflation. Worst of both worlds. Stage 5. International crisis. Dollar weakens. BRICS countries accelerate de-dollarization. Foreign central banks dump treasury bonds. Yields spike. U.S. government faces funding crisis. Cannot sell bonds at acceptable rates. Must print money to cover deficit. This accelerates dollar decline. Vicious cycle. Other countries see dollar dying. Panic to exit intensifies. Dollar loses reserve status rapidly. Stage 6, banking system collapse. FDIC has $125 billion to ensure $9 trillion in deposits. Ratio is 1.4%. If even 5% of depositors want cash, FDIC is insolvent. Government must backstop. More money printing, more inflation. People lose faith in banking system, demand cash. But cash is also depreciating. People demand hard assets. Gold, silver, Bitcoin, real estate, anything physical. Prices of hard assets spike. Prices of paper assets crash. Stage 7, social breakdown. Unemployment hits 15 to 20%. Government cannot pay full Social Security or Medicare. Benefits cut. People who depended on government checks face poverty. Crime rises. Civil unrest begins. Government implements capital controls. Bank withdrawal limits. Travel restrictions. CBDC mandatory rollout. Those who prepared survive. Those who did not face catastrophe. The sequence takes 12 to 24 months. Could be faster. Could be slower. But pattern is consistent with every major collapse in history. And we are seeing early stages now in 2024. Commercial real estate stress, regional bank fragility, debt ceiling fights, geopolitical tensions. All ingredients are present, just waiting for spark. Now let me address the critical question. Is there safe haven? Short answer. Physical assets, but with major caveats. Long answer requires nuance. Gold and silver will likely preserve wealth, but may experience short-term crash, as everything initially sells off for cash. This happened in 2008. Gold dropped from 1,000 to 700 in few months during crisis, then rallied to 1,900 over next 3 years. Pattern may repeat. If you can hold through volatility, precious metals are wealth preservation. Real estate is complicated. Residential real estate will drop 20 to 40% initially as unemployment rises and foreclosures increase. But unlike 2008, this time inflation is also a factor. So real estate may drop in nominal terms, but hold value in real terms versus depreciating currency. Additionally, those who own outright with no mortgage are safe. Those with variable rate mortgages face disaster. Those with fixed rate mortgages at low rates are actually in good position because debt inflates away. Farmland and productive land will hold value best. Food production is necessity. During every crisis, those who control food survive. Bill Gates knows this. That is why he owns 242,000 acres. You may not afford that much, but even small plot of productive land is valuable. 1 acre can feed family if farmed properly. 5 acres can generate income selling produce. Bitcoin and cryptocurrency are wild card. Bitcoin maximalists claim Bitcoin is digital gold and will survive. Bitcoin skeptics claim Bitcoin is pure speculation and will crash to zero. Truth is probably middle. Bitcoin may crash 70 to 80% during initial panic like it did in 2018 and 2022. But if it survives and confidence rebuilds, it may rally as alternative to fiat currency. High risk, but potential high reward. Only invest what you can afford to lose completely. Cash is trap. If you hold dollars during hyperinflation, wealth evaporates. But if you hold cash during initial deflationary crash, you can buy assets at bottom. Timing is everything. Ray Dalio recommends balanced portfolio. 30% stocks, 40% long-term bonds, 15% intermediate bonds, 7.5% gold, 7.5% commodities. This is all-weather portfolio, but this assumes bonds are safe haven. In everything bubble collapse, bonds crash too, so Dalio portfolio may fail. Better strategy for everything bubble. 40% physical assets, gold, silver, farmland, productive real estate, 20% cash for buying opportunities during crash, 20% essential stocks, food, energy, healthcare, defense companies that provide necessities, 10% Bitcoin or crypto as asymmetric bet, 10% offshore diversification, assets in other countries and currencies. This is survival portfolio for everything bubble, not optimized for returns, optimized for wealth preservation through chaos, but portfolio is not enough. You also need skills, community mobility, skills, medical, engineering, agriculture, trades, things that create value in any economy, community, strong local networks, people you trust, mutual aid during crisis, mobility, ability to relocate if necessary, second passport, offshore accounts, exit options. Additionally, you need information awareness. Most people will not see collapse coming because they trust mainstream media and government assurances. You cannot trust official sources. They have incentive to maintain confidence. They will lie until system breaks. You must watch alternative indicators, bank stress, credit spreads, currency movements, commodity prices. These reveal real conditions, and you need timeline awareness. This is not 10 years away. This is not 5 years away. Based on all data analyzed across 9 videos, timeline is 2026 to 2027. Could begin late 2025. Could extend into 2028. But central tendency is 2026 to 2027. This gives you 12 to 24 months to prepare. Use this time wisely. Let me now synthesize key insights from entire series. Insight 1, debt is weapon. 317 trillion global debt is not mistake, not accident. It is deliberate control mechanism. Debt enslaves individuals, companies, countries, those who issue debt control those who owe debt. Federal Reserve, BlackRock, major banks are debt issuers. You are debt ower. This relationship is power hierarchy. Breaking free requires eliminating debt and acquiring assets. Insight 2. Money printing transfers, wealth. Cantillon effect proves new money benefits. Recipients first, harms recipients last. You are always last. Billionaires are first. Fed prints money, billionaires buy assets. Prices rise, you buy after inflation. Your purchasing power declines, their wealth increases. This is systematic theft legalized by central banking. Insight 3. Pattern recognition is prophecy. 7-stage collapse pattern destroyed Rome, Britain, Soviet Union. America is stage 5. History does not repeat, but rhymes. Dollar hegemony is ending like sterling hegemony ended. Reserve currency status is temporary. Average duration 94 years. Dollar has been reserve 80 years. Timeline suggests transition soon. Pattern is clear. Insight 4. Physical beats paper. Every currency collapse proves this. Weimar hyperinflation, Zimbabwe hyperinflation, Venezuela hyperinflation. Those with physical assets survived. Those with paper currency starved. Billionaires buying farmland, water rights, bunkers reveals their knowledge. They expect paper to fail. They position in physical. You should too. Insight 5. Government will confiscate. 1933, gold confiscation proves government seizes wealth during crisis. CBDCs make confiscation easier than ever. Programmable money, automatic wealth taxes, negative interest rates, expiration dates. Your digital wallet is government's wallet. Only physical assets outside system are truly yours. Insight 6. BRICS is accelerating dollar death. Petrodollar ended June 2024. BRICS expanding. Gold accumulation accelerating. Alternative payment systems launching. De-dollarization is not theory. It is happening now. Dollar reserve status declining faster. When critical mass is reached, dollar crashes rapidly. Sterling collapsed in 25 years, but most decline occurred in final 5 years. Non-linear collapse is coming. Insight 7. Everything. Bubble is different. Previous crises offered rotation to safety. This crisis offers no rotation. Everything is bubbled and everything will crash. Only question is what crashes least and recovers first. This is why preparation is critical. This is why diversification is essential. This is why you cannot trust a single asset class. Insight 8. Timeline is near, not distant future, not next generation. Your lifetime, your immediate future, 2026 to 2027. All indicators point to this window. Debt unsustainable, demographics worsening, geopolitics fragmenting, climate disrupting, technology automating jobs, multiple pressures converging, perfect storm forming. Time to prepare is now. And insight 9, you have agency. Despite systemic forces, individual choices matter. You can prepare or not prepare. You can diversify or concentrate. You can acquire skills or remain dependent. You can build community or isolate. You can understand system or trust authority. Your choices determine your outcome. This is not defeatism. This is empowerment through knowledge. So what should you do right now? Immediate actions for next 12 months. Action 1, reduce debt. Pay off credit cards. Pay off variable rate loans. Keep only fixed rate mortgage at low rate if affordable. Debt is vulnerability during crisis. Debt-free is power. Action 2, build cash reserve. 3 to 6 months expenses in cash. Not in bank, beyond FDIC limits. Physical cash at home and safe. This cash is for buying opportunities during crash, or for survival if banking system freezes. Action 3, acquire physical assets. Start with precious metals, 1 ounce gold, 10 ounces, silver minimum. Then expand based on resources, farmland if possible. Productive real estate, tools, equipment, anything with intrinsic value. Action 4, develop skills. Take courses, learn practical skills. Gardening, food preservation, first aid, basic repair. Skills are wealth that cannot be confiscated. Skills travel with you. Skills create value in any system. Action 5, strengthen community. Know your neighbors, build local networks, join groups. Establish relationships. During crisis, community is security. Isolation is vulnerability. Action 6, secure water and food. Install water filtration. Drill well if possible. Store 6 months food minimum. Learn to grow food. Water and food are survival. Everything else is secondary. Action 7, plan mobility. Identify safe locations. Rural areas near agriculture. Lower cost of living. Strong communities. Have plan to relocate if necessary. Have resources to execute plan. Action 8, diversify jurisdiction. If possible, obtain second passport. Open offshore accounts. Own property in multiple countries. Diversify political risk. When one system fails, have alternatives. Action 9. Stay informed. Follow real indicators, not official propaganda. Watch credit spreads. Monitor bank stress. Track currency movements. Observe commodity prices. These reveal truth mainstream media hides. Action 10. Share knowledge. Warn people you care about. Share these videos. Discuss preparation. Help others understand what is coming. Community prepared is stronger than individual prepared. This is not guarantee of safety. No strategy is perfect, but preparation dramatically improves survival probability. And survival is first step. After survival comes opportunity. Those who preserve wealth through collapse can buy assets at bottom. Those who understand new system can thrive in new order. Crisis destroys some but enriches others. Question is which category you fall into. Final message. This is not fear. This is reality. Mathematics is clear. History is clear. Pattern is clear. Timeline is clear. Everything bubble will collapse. 2026 to 2027 is reckoning. But reckoning is not end. Reckoning is transition. Old system dies. New system births. Those who cling to old lose. Those who adapt to new win. 9 videos brought you here. 9 videos showed you truth. Now you must decide. Prepare or hope. Act or wait. Choose wisely because time is short. Window is closing. Collapse is approaching. And when it arrives, your preparation or lack thereof determines everything. Subscribe to Dark Money Historian. Share with those who need to know. Comment your preparation status. Support each other. Build community. Because what is coming is bigger than any individual. This is civilizational transition. This is monetary reset. This is end of era. But end of era is also beginning of era. From chaos comes order. From collapse comes rebuilding. From crisis comes opportunity. Question is whether you survive chaos to see opportunity. Answer depends on actions you take now. Everything bubble is real. Timeline is 2026 to 2027. Collapse is mathematical certainty. Your preparation is your insurance. Your knowledge is your power. Your community is your strength. The answers were never in the future. They were always hidden in the past. And past teaches clear lesson. Systems fail. Currencies collapse. Empires fall. Those who see pattern survive. Those who ignore pattern perish. You now see pattern. You now know timeline. You now have strategies. What you do with this knowledge is your choice. Choose survival. Choose preparation. Choose wisely. Because 2026 is coming, and everything bubble is coming with it. Final warning delivered. Final chance given. Final decision is yours.